All right, we got a little less than 5 minutes before we get started with trading here at the NYSE. Let's bring in Kenny Polcari, principal with Butcher Joseph Asset Management, also a CNBC contributor. What are you watching this morning, Kenny?
Listen, what are you watching? We talked about this on Friday. The path of least resistance was lower. I'm looking at 2830 really on the S&P, which has been the lows that we've tested 3 times since this August correction kind of began. But I'm really looking at the 200-day on the S&P, which is at 2803. Which is the number you really want to see the S&P to test. You want it to see the test and hold. You don't want it to see and test and fail. But in my mind, based on everything that's gone around, the inverted yield curve, the 30-year bond now yielding less than the dividend, than the S&P 500 dividend, all the geopolitical news is just going to cause the market to kind of thrash around. And it needs to test lower in order to find that support. So that's what I'm looking at.
Wonder how you're reading the move in small caps, which have been hit especially hard in August, Kenny, down 7.5%, first negative month in 3, and down sharply from their highs, way more than the overall market.
I know that's actually confusing to me that the small caps continue, but it's interesting. On the down days, they get hit harder. On the up days, they kind of outperform by a little bit. But it's more the concern about them getting hit so hard on the down days. And I'm as confused as anyone because, quite honestly, the small caps are typically U.S.-centric names, right? Not really exposed to the international markets, not really exposed to tariff wars and all that. And so there's a little bit of a disconnect there between why they're getting hit. And that might suggest that the small caps are the ones that's the canary in the coal mine, telling you that, in fact, the U.S. economy is going to be is weakening. I'm not in that camp. I still don't believe it. I think some of the macro data continues to be stronger than not, and so therefore I'm still believing that this is just kind of a corrective phase within the longer-term cycle.
Kenny, you mentioned 2830 or thereabouts in the S&P, or a little bit below that for the 200-day. We're talking about 2 to 3% of a cushion to the downside versus where we've traded now. We've gotten down toward that 2830 level in the S&P a couple times this month. Do you take anything from the fact that the S&P is holding above its recent lows, even as Treasury yields hit new lows and the yield curve deepens into new lows? In other words, that there's not as much sensitivity in stocks, or are stocks just on the edge of a cliff here?
No, I think it's the latter. Not that it's on the edge of a cliff, because I don't want to give the sense that there's going to be this crash coming, but I do think that the S&P hasn't really recognized, the broader concerns of the market. Look, the Dow is tested and failed a couple of times, although slightly. It's 200-day. The Russell is certainly well below. The Dow Transports is well below. The Nasdaq and the S&P are the only two that have not tested the C. And so my sense is that's why I think the path of least resistance is lower still and not right in here. I think it's going to come. I think the S&P is going to test it, but I think it's going to find support there. I'm a believer that there is some support there, and that the broader conversation about the geopolitics and the inverted yield curve and the coming recession is really at the moment overdone.
Meaning what exactly then? You think we're going to actually move higher into the fall here after we get through this quiet period and people come back to work?
No. So I think we're going to test low. We're going to thrash around a little bit, and as we move into year end, yes, and I think the market's going to rebalance and move higher. I don't think it's going to be significantly higher. I'm kind of thinking around 3,000 is going to be the year end target, but I think between now and then you're going to see us test lower, thrash around a little bit, and then move as we move into the end of the year.